Hey, this is Justin with DayTradeTheMarkets.com. It's actually Saturday, March 16th, and I had a question from somebody who trades the YM, the mini-dow. We don't often talk about the mini-dow. Usually when we talk about the index markets, we're looking at the E-mini S&P, but his question was, can you use this on the mini-dow? And there certainly are some advantages to trading the mini-dow in terms of tick size and that sort of thing. So what I thought I would do is just have a look at the mini-dow across a few different time frames, and actually maybe even build a chart piece by piece and do some explanation of what each piece is telling you and what it means and how you can make sense of that. Whether you trade the mini-dow or not, certainly this can be helpful in terms of your understanding of what this software can do and how it can potentially help you increase your edge. And again, that's the whole point of really what we're doing. There's nothing magic about this. It's not some black box. It's not some robotic system. This is really about using really good, unique information that's presented in a nice visual way to help you increase your edge by helping you have better information to make better decisions, because it all comes down to making better decisions. In other words, if you can get into more winning trades, avoid more losing trades, stay in winning trades a little bit longer, bail out of losing trades a little bit sooner, those things are how you increase your edge. There's no magic secret to trading. It's simply about doing those four things, and certainly this software can help. So what I thought I would do, the video may take 10 minutes, so hopefully you're willing to stick with it through that. But what I can do here is talk about this in generalities and then show some different charts over different time frames and kind of break them down and show what each of these pieces are doing. But essentially what we're doing is we're looking at various pieces of real-time information as well as bigger picture analysis to really make sense of what's going on in the market in real time by looking under the surface, not just at some technical indicator, not just at what price is doing, but actually looking at what predicts price, which is order flow, as well as some other things like velocity, range, some volume, some other factors like that, to come up with what we call basically puzzle pieces or pieces of evidence. And the idea here is that the more of these puzzle pieces that you put together, just like if you're doing a puzzle on your kitchen table, the more pieces that come together, the clearer your image is. So by looking at each of these individual components as giving you information and then being able to kind of mix them up in your mixing bowl and see what comes out, you get a much more clear idea of what's going on in the market, so that number one, you can avoid being on the wrong side of the market, and number two, you can really find low risk, high reward opportunities for getting in on the right side of the market. So with that said, what I thought I would do here is remove the indicators here and maybe even go a little bit further back in time here and just make this all price action, and then add pieces of indicators bar by bar. What I'm looking at here is a 5-minute chart, and I'll show some other time frames as well, but a 5-minute chart, a 5-minute chart of the YM going back to basically the end of February, beginning of March. So the 5 minutes is going to actually give you kind of an intermediate. You can certainly day trade with it. You could even swing trade with it a little bit. But what I'll do here is, let me pause this and take everything off of the software. And so here we've got basically nothing, just price action looking back a little over 2 weeks here on a 5-minute chart. So if we go back to our idea, what I'll first add is, well, let's talk about bigger picture. Our bigger picture bias over this time has certainly been up. So all things equal, we would rather be kind of swimming downstream than swimming upstream. That doesn't mean you can't go against that when you see evidence in real time, but obviously apples to apples, we would rather be on the long side in this environment. So just know that as a background, and I'm not going to delve into that too much at this time. But the first thing I want to throw on are what we call relative aggression bars and high velocity moves. And to give a little more detail on that, relative aggression bars are essentially looking under the surface of the market. So we're trying to see which side, buyers or sellers, is more aggressive in any given moment, whether that's on a 10-second bar or a 10-minute bar. Okay, which side, buyers or sellers, is more aggressive, because it's actually aggression when the bulls or bears collectively are more aggressive than the other side that actually moves the market. So if you can identify that, number one, you have an edge. And then number two, if you can identify to what degree is this incredible extreme buying or selling aggression coming into the market, if so, you're going to see a level 3 buying or selling aggression bar. And what we like to look at, especially with these bars, is do we get follow through or do we get rejection? Because that's going to give you 8 or 9 tenths out excuse me, 8 or 9 times out of 10, whether there's follow through or rejection of a level 3 is going to give you just an outstanding roadmap. Same thing to a lesser degree with these level 2 bars. I mean, these level 1 bars are just kind of giving you a little bit of a heads up one way or the other. You don't want to get too fixated on level 1 bars. But the level 2 bars, which you see don't happen all that often, and level 3 bars are really giving us a great roadmap. So again, looking under the surface to see what's really going on in the real-time auction, and then asking ourselves, do we have follow through or do we have rejection? That's really the first building block and such an important component. If you can just that alone, if you can understand this component, you're going to stay on the right side of the market 7, 8, 9 times out of 10. Okay, so I've got the level 2 and level 3 bars on here at this point. And so what I really want to focus in on these level 3 bars, these magenta bars here, and the level 3 bar buying bars, these dark blue bars. Those are really giving us kind of the really, there haven't been a lot of them because we've just kind of grinded high over the past week or two, but when there was a decision being made in this market, you can see there were a lot of them. And what happened on this day, the 28th, is we had a real strong sell-off at the end of the day. We opened up and continued that sell-off, and you can see the first level 3 bar had some follow-through. I know I've got this scrunched up a bit, but just try to hang with me there. And this next one did not. It got rejected. And you know, especially in the context of a bigger picture up auction, which we've certainly been in, when we can get rejection of one of these level 3 selling bars, it's essentially telling us it's capitulation. It's a situation where there's been an aggressive push and there's just nothing there. It's not attracting new selling. Okay, so in other words, it's showing us that price is auctioned low enough to attract buying. And you can see that when the high of this bar is taken out, we start to get some level 2 buying bars. They have follow through higher. Level 3 buying bar. We really want to see what happens with that level 3 buying bar. And what we do is we ask ourselves, just like we did up here with this level 3 selling bar, can the high of that hold? Can the low of this level 3 buying bar hold? Until that's taken out, or until there's other evidence on the right side of the chart that selling is coming in, we have to think at this point bulls are in charge of this market. Just like when this bar came in, until that high was taken out, or until something else happened, and you can see that something else did happen when this high was taken out, and then when this level 2 bar came in and when this level 3 bar came in, that changed the scenario, but you're able to see that in real time. So again, you can see buying starting to come in. We've auctioned low enough to attract some buying, and then you can see a level 2 bar, level 3 bar with just follow through, and it's up and away. Okay, we have some attempted move lower that gets rejected on these days, and you can see we just grind higher. Every time we have an attempted move lower by sellers, and that's kind of been the nature of this market over the past few weeks in the ES as well, is we've had just a grind higher and then a push lower that just doesn't attract any more selling. And you can see that when these level 2 bars come in and get no follow through. Level 2 bar, no follow through. It's what we call rejection. Level 2 bar, no follow through. This one started to have a little follow through, so maybe things are changing. We're into more of a two-sided market in this case. Okay, but you can see here early on in this rally over the past couple of weeks, we had our telltale clues here with this attempted move lower by sellers, which certainly, you know, it sold off 150 points in the Dow when that thing came in. But then when this got rejected, that's our heads up that this strong selling wave is over, and we want to see what happens next. You can see buying started to come in and buying took over. Okay, so that's kind of the first building block. It's those level 3 bars, level 2 bars to a lesser degree that we really want to watch. Okay, so let's bring back our chart. So again, we've gone over the relative aggression bars. There weren't any high velocity moves on this particular chart. I'll show you some other ones. Next, let's look at the filter, just because it kind of plays into these bars as well. So I'll throw the filter on there. And what this is telling us is, and you can see the filter here on the lower part of the screen, which at the beginning of this was green. We had an attempted move lower by the bears, taken over. Now we were strongly, you know, we turned strongly bullish down here toward lows. Okay, so. And now you can see it's mellowed out a bit here in the last day or so. Okay, but again, what is it telling you? When this thing turned, where's the market at 950? Now it's up at 450. So I mean, what is that? 500 points in the Dow. So you know, it's the way I look at the filter is, again, it's just a small piece of the puzzle. It helps. It's not something you'd want to just look at blindly, but it's again giving you another piece of evidence, a tool that you can use. So if the filter's in line with the trade that you're thinking about, it's that extra 1 or 2 or 3% confirmation that you're in a good spot, that you have more edge. If you're thinking about a long and the filter is red, on the other hand, it doesn't mean you can't take the trade. It just means, I like to think of it as a think twice indication. So it's saying, okay, Justin, you better, if you're thinking about getting long here and your filter's red, you better think twice. You better really go over your evidence again and make sure this makes sense. And you might want to be a little more nimble in your trade management. Okay, so that's the way that I think the filter can be of good use. So next, let's throw on what we call support resistance zones. And these are some real-time zones that form on the chart. Where you see them formed is when they showed in real time on this. And so now you can see we've got these zones. Red for resistance, green for support. Okay, red for resistance, green for support. And again, what these are telling us is all things equal. And you want to be able to put this in context. So you don't want to just blindly trade off these zones. But if you get a scenario where you've got a green filter and you've got some good bullish evidence, some rejection of bearish evidence, and you can buy at a green zone, well, that's just giving you more information that things are in your favor. So in other words, a support zone, all things equal, is a good buy spot, and it's a think twice sell spot. A red zone, all things equal, so you really wouldn't want to be selling in this context, but all things equal, that's a good sell spot and a think twice buy spot. Okay, so again, it's a piece of the puzzle. It's not the be all end all. It's not black and white. You still have to think about it, but what that's just telling you is all things equal, whether you have a lower or higher risk entry or exit spot. Okay, so it's really that simple. And again, you can see the market kind of tested resistance, tested support, tested resistance, busted through that resistance on a level 3, didn't stay through that one, couldn't make it down to support, busted through this resistance, and again, we're in a context of an up market, tested support, tested resistance, busted through, tested support. Now we've tested resistance, tested support. So this is certainly an area that we would want to watch heading forward. Which way can this break? And if we do break above or below, do we do it on some strong aggression? Okay, so you don't get head faked if on a false breakout. When there's a true breakout, okay, when there's a true breakout, it's going to be with some pretty good aggression. You can see we broke out of this zone on a level 3 buying aggression bar. That's a true breakout. It's telling you there's something there. It's not a head fake. Okay, so again, support resistance zones can help you. I'll also throw on the what we call divergence and deceleration bars here, and you can see these are the dots and the triangles here that show. Now again, I think a lot of people's brains are trained when they see a triangle, it's a trade entry. You don't want to just trade these blindly. These are again another 1 or 2% confirmation. So if there's other evidence that's already there, so for example, up bias, we've got some strong buying that's come in, we've got a strong filter, we've got a green zone, and then we get some decelerations. Well, that's that extra 1 or 2% confirmation that you can use that's saying, okay, the market is slowing down on the sell side in the very short term. This is probably a good turning spot. Okay, so it's not a thing you would just trade blindly. It's not something that you would look at as robotic. You would say, okay, this is extra 1% information type of a thing. And if you get what I'm talking about and the power behind that, that's good. If not, if you're looking at this systematically, that's not what I'm really saying. I'm saying that, okay, I've already got information. I might want to think about getting long in this support zone. I've got a lot of bullish evidence here. Rejection of bearish aggression, rejection of bearish aggression, filters green, my bigger picture bias is up. Well, this is probably a pretty good spot to be getting long at the beginning of yesterday, or certainly getting short. If you want a little extra confirmation, well, here's your decelerations. Okay, it's pretty simple in that's in the sense that that's the way you would use it. So I realize I'm talking here for a while, but hopefully you're with me. Hopefully this is making sense. It's about putting puzzle pieces together. It's about looking at the evidence to again avoid low edge trades, get into more high edge trades, stick with trades, longer. For example, let's just say when I talk about sticking with trades longer, let's just hypothetically say you got in somewhere in this area. And that's a legitimate idea because again, we expect the low of a level 3 bar to act as support. We've got a support zone, filters up, bigger picture biases up, decelerations. I mean, you've kind of got a lot of stuff working for you there. So let's just assume you were able to get long there. The way you can stick in trades a little bit longer is by simply saying, I'm not getting out until I have a reason to, until there's evidence that I should get out. And one way you could do that, if you're in a nice trade and you like to hold as long as possible, I mean, if you're just more of a short-term trader, you would just ride this out and put some trailing stops behind every buying bar and maybe get stopped out right in here. If you would like to hold it a little bit longer, then you can use an approach where you can wait for selling aggression to come in and wait for a full bar below. So when that selling aggression bar comes in, is there a full bar below? No. Here's another one. Is there a full bar below? No. Here's another one. Maybe there might have been one right in here. Okay, so you get out. But at least you had a reason to get out. You can always get back in. Okay, at least you had a reason. You're not just going off of your gut. You're looking for evidence to tell you, should I get in, should I get out? Okay. Let me go quickly. I know this video is getting long. Let me look at a couple of other time frames. Okay, here's a 2-minute, so a little bit shorter term, just looking at yesterday or Friday's activity. The first piece of evidence we have is this level 2 bar, and so we ask ourselves, does the high hold? Do we get follow through? Yes. Okay, so short term, the market's bearish. Now that's against the context of bigger picture, clearly a very up bias. So you would want to be nimble if you're thinking about a short there. And again, you're against the filter. Okay, high velocity move comes in with some follow through. Again, market short term is bearish. That's what it's telling you. This is the first structure by the bears that gets rejected. You can see its highs taken out, and it's done so on a level 2 buying bar. So you can see things are changing. Sellers are in control. Now we actually have a rejection of that selling structure, acceptance above a buying structure. You can see where they kind of overlap here. It tests to it right there. Filters green, bigger picture bias is up. It's our first sign that things are starting to line up a little bit better. Okay, so you can see the market heads higher, tests and resistance, bounces off, gets out through it, basically tests the high, doesn't make a new high, which is a little bit of a heads up, obviously. It makes a high by a tick or two, but it doesn't do it on any kind of aggression. In fact, some level 1 selling starts to come in. We test into the support, it bounces 15, 20 points, doesn't hold the next time down. The support zone here turns over to red. We sell off. Now still, that's very aggressive, certainly. It tests basically to where the buying came in earlier. The only aggressive buying we had basically tested to its low. But you can see that in the short term, the market was more mixed. Now we head higher, get above this zone, and test at the very close toward the green zone. So again, a consolidating day, but again, the 2-minute is giving you different information than the 5-minute's giving you. But it's still information you can use based on the time frame and the comfort that you like. Okay, here's a slightly different look. Here's a 1-minute chart, which I think is a good day trading time frame on the YM. You can see our first major structure is this high velocity move. It's showing us that some bullish activity is coming in. We test into this resistance zone, bounces off. We go and bust through it, and you can see we make a level 2 on the high that holds, and we bust higher. But then you can see as we're taking out its high, we see some aggressive selling start to come into the market here on this 1 minute, which is giving us a little short-term view than what we just looked at on the 2. So that's our first sign that things might be changing. Okay, that on the shorter term time frame here, some selling starting to come into this market. So we want to watch that. We want to watch that if we're thinking about getting long. We probably want to get out of our position. And if you're an aggressive seller, then that's certainly, you can use that information. But you can see we bounce and touch support, but our filter changed over at that time. Once we get below, it turns over. It tests back into the resistance. And again, our filters changed, and you can see we start to get some selling. And it sells down into the support zone, in which case it then turns around and we head up higher toward the close there. That's a 1 minute. You can also look at this on more of a swing trading or even position trading basis. Here, for example, is a 15-minute. This is kind of an intermediate swing type of a time frame. I've got this scrunched up. I apologize, but this is going back toward the beginning of March. And again, you can see where we sold off. You can see where rejection of that selling, just like we saw on the 5-minute. Here's some level 3 buying that's coming into the market. The filter turns over to green. We test into the support zone. More level 3 buying. We get through, test back into the support zone. More level 3 buying. We have a little bit of a 2 time frame there with an attempted move with sellers. I know that's hard to see, but there's a level 3 selling bar there, but it got no follow through. So that's a pretty good indication. Then we bust higher on a level 3 bar. We test the low of that. Test the support zone, head higher. You can see that we just kind of keep going between this support and resistance zones as we grind higher. Level 3 bar. Test down to support. Here's some selling that started to come in. Okay, but it couldn't get through support. Now, same thing, we bust higher with a level 3 bar. We're having some mixed signals in here over the last day, and that you can see that across a lot of different time frames. I know I'm going through this kind of quickly. The video is getting long. I apologize, but hopefully you're grasping what I'm saying, and more importantly, I just hope you're grasping the concept of what is the evidence telling me. What can I do with that evidence? Do I have follow through? Do I have rejection? Does it make sense to get? Is it a low risk opportunity? Is it a high risk opportunity? Is there a lot of reward possibility? Am I fighting? Am I swimming against the current? Am I swimming with the current? All these different questions. It's about the process, and that's what we try to teach. So I could certainly show more charts. I mean, you could use a 10-second micro scalping chart if you wanted. You could use a 60-minute or 240-minute. That's going to give you more of a position trading type of a scenario where you're looking at things with a position that you might hold for weeks and months. So that's the idea here. Hopefully that makes sense. Thanks for sticking with me on the 20-minute video. And if you have any questions, let us know. We're more than happy to answer questions. If this idea resonates with you, if you get the idea of how increasing your edge can make a big difference, that there's not some magic system out there, but it's about being able to make better decisions. If you get that concept, if you're to that level, and I know as beginner traders, a lot of us, and myself included, we kind of have to go through that process of thinking there's this magic indicator, this magic system, and there's unfortunately a lot of people out there that prey on people like that and tell you that there is. If you're beyond that, or if you don't want to go down that rabbit hole, because you don't have to, let us know. If you get the power of that concept, let us know. All right, well, have a good rest of your weekend, and we'll talk soon. Thanks.